look, I think, on one hand, I think this is an incredible time to accumulate Bitcoin. Like I mentioned, I think we're in a historical, level of undervaluation, even if, macro takes us on one, further flush down, that would be, I think, kind of like a generational buy opportunity. But yeah, from like a full on market reversal standpoint, I think.
All right, welcome back everybody to Altcoin Daily. My name's Austin, joined by analyst, researcher, co-founder of Reflexivity Research, new company that does crypto market research and a proprietary trading firm. Will Clemente, thanks for joining me.
Hey, Austin, thanks so much for having me on, man. It's been a minute.
Definitely, man. Lots changed in Bitcoin, lots changed in macro. But let's, just for our audience, you've always been, an analyst in this space in general. You've been on before, but what is your new company, Reflexivity Research?
Sure. Yeah. Thanks for the plug. Yeah. So Reflexivity is a dual arm entity. Half of the house is a research firm where we cover all things from Bitcoin, Ethereum, DeFi, global macro, and even a little sprinkle of NFTs. We have a team of 3 or 4 analysts in addition to myself, whereas I kind of specialize on the Bitcoin side. We've brought in individuals on from other crypto firms that specialize in DeFi, Ethereum, and these other topics. And so I think we offer a really good breadth of knowledge base for especially traditional finance entities that are perhaps interested in getting involved in the space, but don't really know where to start. And so kind of the mission of launching the business was to utilize some of the things that I've learned over the last like 2 years. But in addition, kind of like the core mission of the company, I would say, is to help kind of bridge these traditional entities into crypto and kind of give them a starting point in terms of how to think through things. And then on the other side of the house, it's a proprietary trading fund where we essentially utilize the research on the other side of the house, and then it kind of gives us this symbiotic relationship, I would say, between utilizing the research and then executing on it on the prop side.
Dude, I think that's perfect for you, right up your alley. And it'll be cool to, watch this firm grow. I'm going to put the Twitter and the website down below as well as yours. But let's just jump right in, man. Macro has been crazy these last few months. What's your general take on macro right now?
Sure. Yeah, that's a huge topic, right? Yeah, I think if we could back up a little bit, the last time I came on the show, I don't remember exactly when that was. Maybe it was like Q1 of this year, something like that.
Might even been last year, but something
yeah, maybe it was
far
even
away.
the end of last year. Yeah, a long time ago. I don't specialize in global macro. We have a global macro analyst here at Reflexivity, but what I would say is kind of going off of the last time I spoke, I talked through how we were likely headed into a recession as the Fed looked to combat inflation, and with debt to GDP at 130%, everything all levered up in every market from crypto to housing. There's a high likelihood that we were going to head into, at a minimum, an economic slowdown, high likelihood of a recession. And while we have seen 2 negative quarters of GDP, technically we're not in a actual recession. But it feels very much like we are in one. I was in diapers the last time we went through a legitimate recession in 2008. I was 6 years old. So these have definitely been interesting times for me personally. Look, I would say the kind of global macro situation really boils down to kind of 2 things, and from like when people talk global macro, I think in crypto it really just comes down to like Fed policy, because that's what crypto native people really care about. Obviously, the Fed's been tightening to combat inflation, as I just mentioned. But in terms of things that are going to get them to kind of ease off the gas, I would say kind of really boils down to 2 things. Just for sake of simplicity, one would be inflation subsiding, and then the second one would be seeing something kind of materially breaking in the financial system. Looking at, for example, like the treasury market, right? If you start to see the treasury market essentially go no bid, certain types of things around I would just say like the plumbing of the financial system. Like if you start to see things break down, I mean, we have started to see things like currency moves that are like, orders of magnitude that are kind of mind boggling, right? We saw what happened with the pound, and the UK stepped in basically and said that, hey, we're gonna cap bond yields, within a matter of like 24 hours. So, these types of things are already, starting to kind of show cracks in terms of some of the underlying financial plumbing, breaking down a bit. If you do see that get a bit more severe, I would say that there's a high likelihood that you will see, some degree of Fed, intervention, because, their mandates come down to three things. It's employment, inflation, and then the third kind of unofficial one is financial stability. And so while obviously, they've made, inflation a priority, and I think at the same time, from a reputational standpoint, especially, listening to Powell speak, you can tell that they know that they messed up since 2020, as they continue to pump liquidity into the system. And so now it seems that they're basically looking to correct that prior mistake and sustain that, credibility if they have any left. And so, I think, there's a high likelihood that unless you start to see something, substantial happen in terms of, inflation rolling over, it seems like they're kind of just headed on this direct course for, maintaining their current positioning until something breaks. And, I think at that point, they could step in and say, they could frame it in a way of saying like, here we're coming to fix everything, and here we're coming to save the day, similar to what they did, after COVID in March of 2020. They frame it as, hey, we're coming to save the day after, something materially breaks. I could see that, but, for the time being, I think there's a low likelihood of a quote unquote, Fed pivot, especially in the kind of sense that, people are talking about of, hey, at the next meeting, they're going to come out and say, hey, we're dropping interest rates. Like, I think that there's very low likelihood of that happening unless, something kind of materially breaks in the system.
Really? Haven't I hear that it seems like sentiment, they've been pressing so hard and hiking rates so fast. I thought there was hints going around that they would pivot or at least halt. You don't think they will?
Sure. Yeah, I think, like full on pivot and halt are, I guess, are, kind of two different discussions. If we look at kind of the terminal rate, so like the rate that the Fed wants to get to, and also the rate that, the market is pricing in that they will get to, we're closing in on that, right? So I think, sure, we're perhaps on the back half of this tightening cycle. But, in terms of them just holding rates, perhaps where they are, especially because, I think they have, mentioned this in meetings, and this is a pretty good thing that they've acknowledged this. There's a lagging effect of, when they raise rates and when there's like a material effect on the economy, right? So, I could see perhaps if they, paused for a bit after maybe this next like 50 basis point hike, and, perhaps paused a bit and said, hey, like, let's reassess, everything that we've done to the system at the moment, and then kind of, take it from there. But in terms of, them, coming out at the next meeting and say, hey, look, we're cutting, 50 bips, 75 bips. I think, unless we do see, like the treasury market go no bid, there's a low likelihood, I think, of that happening.
Let's talk about Bitcoin. Do you have any charts for us or just your general sentiment on Bitcoin in Q4 of this year? I know you're bullish long term, but I'm talking about Q4.
Yeah, for sure. Look, I think to start kind of, just on Q4, I guess a little hopium for the listeners. Q4 has historically been the best performing quarter for Bitcoin. It's not even close. I think the average returns for Q4 are something like, my dog just decided to
love it, dude.
I think the average returns for Bitcoin during Q4 are about 103%. And in terms of monthly returns, October and November are Bitcoin's best performing months. So in that sense, you have seasonality on your side. But of course, seasonality isn't everything, from an actual, like, very analytical perspective. I think kind of our view of the Bitcoin market is broken down into a few subsectors. One of which is derivatives. We look at on-chain analytics. We obviously look at macro very closely, which has been a massive driver of everything going on in the Bitcoin market over the last year. And so what I would say is, from a on-chain analytics perspective, I guess to start, the way we kind of see this has definitely evolved over time. We don't really look at, exchange balances or, our wills accumulating or, any of those types of things. What I do think is useful from like on-chain analytic perspective is kind of gauging what's the relative valuation to like historical precedents of market participant behaviors. And so by several measures, and I could name them, but for sake of time, maybe I'll hold off. But I would say there's 5, 6, or 7 kind of valuation metrics that I think have historically held up very well, and have been utilized in real time, that are showing that Bitcoin is kind of, if we look at essentially a percentile of valuation, it's in that lower kind of 5 percentile or 10 percentile, on the kind of that spectrum of historical valuation. So I would say, from that sense, Bitcoin's definitely in an area of value, below 20,000. When we look at order books, we see kind of a confluence across, multiple order books. One of the ones that, we look most closely at is Coinbase Spot. And the reasoning behind that is because that's where a lot of these US-based institutions operate, because Coinbase has a lot of, they've done a lot of work on the compliance side, regulatory side. They're a publicly traded company. So a lot of these United States-based firms feel more comfortable operating on Coinbase versus like an overseas exchange, like I'll just throw Binance out there, or KuCoin, or any of these other guys, right? So they feel more comfortable operating on them. So that's one of the reasons why I look at Coinbase pretty closely. When we look at Coinbase, there's a very, I would say, clear kind of pocket of bids from below, I would say about 18,500, down to about 11,000 to 12,000. And so, what I'm saying in here is that, there's a strong amount of demand for BTC, sub 19K. And we also do see that, a confluence of that across, multiple other venues, in particular looking at spot venues. And so, that's another reflection of kind of that value area for BTC, sub 20K.
So let me just sum up what I think you just said, and you just give me a yes or no if I generally got it. Based on historical context, looking at the value of the network right now, anything under 20K is either fair or slightly undervalued for BTC looking long term. That was your first point. And the second,
I would say I'm very undervalued instead of fair value.
Okay. Okay, interesting. I think so too, if you wait long enough, but it's just hard to tell with this macro. Sure. So if people were like waiting for us 11K Bitcoin, the better move is like to start DCAing in now, or I know I don't want to get specific, but you're saying it's undervalued now.
I would frame it this way, right? Like if, valuation and price are two different things, right? So something can be undervalued and become further undervalued, right? So I would say at this time, Bitcoin by, these different, blockchain native metrics, and then as well as looking at order books, I would say that we are in this value zone, as we speak, sub 20K. But that doesn't mean, if you had some, broader macro capitulatory event that, basically you had this correlation to one event similar to like, COVID or something of the sort, you could of course see Bitcoin go lower, but I would say that would push Bitcoin from, value to extreme deep value. And I would expect, that basically to get bought up very quickly, because we already are in this period of relative, undervaluation. So, of course, it's, the macro kind of backdrop could push Bitcoin below kind of this area right now of, undervaluation. But, I do think if that were to happen, you would see Bitcoin bounce back very quickly.
Will Clemente, really appreciate you sharing your time. Links for all your stuff down below. Final thoughts for the Altcoin Daily Army.
Look, like I guess I kind of just mentioned, like I think these are great times to get involved in the market, and especially for those who perhaps got involved in 2021. And I think a lot of market participants kind of get involved in crypto, and they get involved at the top, right? And then they go through their first bear market, and that's when you can really make your money in the next cycle. And so I would say if you haven't kind of lost interest and haven't lost conviction now, I think you'll probably make it, because we're on a, as I mentioned, like a kind of spectrum of things. We're on a relative basis in that kind of lower quadrant of, valuation. So I would say, if you kind of made it this far, and you're still solvent, and you're still very interested in the space, and, very convicted in the space, I think you'll make it. So I would just say, don't lose conviction. Continue to follow closely, because this is where the opportunities are found, because this is where people aren't paying attention to everything. This is where you can get active in the Discord and find certain projects that people are overlooking, because all the attention generally on crypto has subsided. So I would say this is the time to really kind of put your nose down to the grindstone and kind of make your moves for the next bull market. And in addition to that, if you're interested in launching your own project, kind of I didn't launch a crypto project, but I launched a business venture recently, and part of that is because exactly what I just said. I think now is the time to kind of build out whatever project or venture that you're looking to do. So.
Are you hiring? If somebody out there in the audience has a skill in research or trading, are you hiring?
Absolutely, always hiring. Just DM me. My DMs are always open. Of course, looking for people who have like specialized knowledge in some certain subset of the market. But if you feel that that's you, DM, reach out. Happy to hop on the phone anytime.